Hello and welcome to this annual update on the Baillie Gifford Pacific Horizon Trust. I'm Roderick Snell, lead manager of the Trust. And our aim for the Trust remains simple: to achieve long-term capital growth by investing in the best growth companies in the Asia ex-Japan region. When looking at the market performance over the year to July 2025, a few trends stood out. China, after a few extremely weak years, has outperformed India, and the capital expenditure boom in artificial intelligence continued to support the semiconductor sector in Korea and Taiwan. Despite cutting back our Indian exposure and reinvesting much of it into China, the portfolio's relative performance lagged during this period. Stock selection in China was the main detractor, especially the underweight in state-dominated financial sectors, and not owning some top-performing technology companies like Xiaomi and Alibaba. On the positive side, stock selection in Taiwan, especially the semiconductor-related holdings, added to performance. Our holding in Sea Limited, a Singapore-based e-commerce and gaming company, has also outperformed with strong operational progress. Asia ex-Japan equities have outperformed major global indices so far in 2025. A weaker US dollar and renewed domestic policy support in China mean that two major headwinds for the asset class have eased. While geopolitics still creates uncertainties, most Asian markets have shown remarkable resilience to tariff headlines. While our long-term turnover remains low, we have taken advantage of recent market moves to profit from some existing holdings and reinvest in places where we believe growth remains underappreciated. There were two noticeable changes in the portfolio. First, we added significantly to China and broadened our company selection across various sectors. More specifically, we increased our exposure to internet platforms such as Meituan and Tencent. We added industrial companies including CATL, the world's leading EV battery maker. We also found attractive opportunities in consumer discretionary companies such as Haidilao, one of Chinese largest restaurant chains. And other new purchases included Kanzun, a leading digital recruitment platform in China. We also initiated a small holding in Pony AI, an autonomous driving operator. As a result, China is now our second largest overweight position by country. To fund this, we trimmed our exposure to India, especially in the real estate and industrial sectors, which have performed well over our holding period. We've also added modestly to Vietnam, which remains our largest active position by country. We remain optimistic about the outlook for Asia. Macroeconomic fundamentals are strong, valuations remain low, and sentiment in China is clearly improving. A weaker US dollar could act as a further tailwind for the region. The portfolio has outperformed the index strongly in the most recent months after the annual reporting period, led by our holdings in the mining sector. Overall, the portfolio holds a broad mix of growth businesses in the region, from technology innovators to commodity producers and domestic consumer champions. These underlying companies are performing well and remain attractive. On average, our holdings are forecast to grow earnings by more than double the comparative index, while still trading at a lower valuation than the market average. Combined with the supportive backdrop for the region, we believe the portfolio is well positioned to benefit from what should be a strong period for Asian markets. Thank you for your support for the Pacific Horizon Trust. For more detail, we invite you to read the Trust's latest annual report on our website, and we will look forward to seeing many of you at our next AGM.